Hey traders, a very warm welcome to you. Okay, so we are finally kind of getting into the nitty gritty now. We've adjusted the strategy, we've looked at the strategy, looked at the personality type, we've kind of touched on that and decided, hey, we know what strategy we're going to use. We know the type of person we are. We know the kind of things we need to avoid as a trader. We know the market conditions we're in. Okay, we're getting somewhere now. We've wiped the slate clean. We're starting afresh. So, and the big thing is that we've analysed our statements, we've analysed our journals, we've analysed our thoughts, and we've said, hey, you know what? I'm making loads of money, then I'll lose it all in a couple of days, and we've put in place a process to eliminate that. But the big thing is, we now have a journaling issue. Journaling, can I spell? Just about. Okay, luckily my trading's better than my spelling. Journaling is a big thing for us. If you haven't been journaling yet, don't worry about it, but let's start now. Now, from my perspective, I'm not one of these guys who says, listen, you've got to have a massive thing that's written out and all this kind of stuff. You do what suits you. If you want to write on Excel, you write on Excel. You want to write on Note on Mac, you write on Note. You want to write on a bit of paper, whatever. To me, I couldn't care less, as long as you are writing some information down. And the big things we want to be writing down are, most of all, our feelings. This sounds a bit like, what's that all about? But as we talked about in the previous videos, if you haven't seen them, go and check them out. This is one of the big pieces of the puzzle. The strategy is a big piece of the puzzle. We can't make money if we've got a strategy that's not profitable and we're using the wrong strategy for the wrong market conditions. Plus, we can't make money, or we're going to make money and we're going to lose it all because we're going to self-sabotage if we trigger this kind of tilt-based trading trading on tilt, trading against our long-term trading, our long-term profitable objectives. Okay, so feelings. What do I mean by that? So we want to note down how we're feeling in the day. So we come in, I know a guy who uses a traffic light system, but we're not going to go into some details, real fine details here. But what I want to say is, listen, how do you feel in the day? Are you feeling like you need to make money? Are you feeling pretty calm about it? Are you feeling anxious? Are you feeling excited about trading? The reason we're writing this stuff down is we're trying to work out which is the trigger emotion for the better trading behavior and the good trading behavior. If we come in and we say, hey, we're really excited today because it's Fed day, or there's been a big gap overnight in the favorite stock that you're trading. And then ultimately we look back and we say, actually, every time I've noted down that I was excited coming into the trading day, I've lost money. Guess what? When you feel excited when you come into the trading day, don't trade or trade half size. Simple. But unless you have that data, you're not going to know. And then we've got another thing of, let's say we're feeling, frustrated, okay? Frustrated, perhaps that's because we've lost money in the last 5-6 days, or we've missed out, whatever it may be. Again, it's whatever negative emotion is triggering you here. If you say, listen, I'm frustrated, and then you figure out, you're losing money on those days, again, we can say, well, when you're frustrated, let's resolve that issue before you start putting your risk capital into play. Sounds so simple, but guys, this is the biggest thing. And honestly, one of the things that I did, which massive breakthrough in my own trading, is when I started analysing this, and I look at an emotional thermometer, because sometimes I think I was trading God, I'd have made so much money, and the next day, I'd lose loads of it, and that would frustrate me. So my thing was, hey, listen, when you feel like you're just the genius, then you need to take a day off. You need to just say, hey, listen, take a day off and put it in perspective here of what's going on. So it all depends on what you're doing. You're feeling sad, you're feeling frustrated, you're feeling pressurized, perhaps you've got bills to pay and you've lost a lot of money, or you've lost so much in the market, you feel like it's such an uphill battle. If that's fogging you, then fine. Let's look at some positive emotions. Let's say you're refreshed, right? You come in, you're refreshed and you're alert, right? You've had a good night's sleep, you've done something that's refreshed you in the prior evening or whatever it may be, and you're ready. You're doing analysis, you're like, yeah, I'm on it, I feel like what the market is doing, I've got my strategy in place and I'm ready to go, I'm patient, all these kind of things. Perfect. So what we're getting to now is we're getting to a point where just by writing down feelings, there's just one thing on the journal. What's one thing? We are getting now to a point where we can say, hey, listen, actually, again, it comes down to honesty as well. We've got to be honest with ourselves. Can't go into each day saying, oh, I feel refreshed and alert, when in reality, like, I'm a bit tired, didn't get much sleep, I'm a bit anxious that it's a gap up and I'm not very, you've got to be honest, otherwise it's not going to work. But already you can see just from the first entry into our journal that we can identify areas of weakness that we can eliminate or we can reduce the impact of. Excited, frustrated in this example. These are just examples, guys. Excited and frustrated. Straight away, listen, I know I'm just bad at excited. I'm gonna take the rest of the day off. And you know what? It's counterintuitive because most of the time we're conditioned to think that if we're in front of the screen, we need to be in front of the screen to make money. But the objective of this is to not be in front of the screen unless we're at the optimum time. Because unlike almost every other venture out there, you can go backwards in trading. Your job as a trader is okay to make money, but you can undo all the stuff you've done. It's not a case of having a bad day. I can't think of a career, but something you've had a bad day and you're still going to get paid at the end of the month. So one of the main things that we're doing here is trying to eliminate these damaging days. Again, frustration, we come in, we're like, oh, I'm not very good about it. Okay, maybe you don't take the day off. Maybe you go half size. Maybe it's okay, for the first couple of trades, I'm going to go half size. Again, from a day trading perspective as well, but also from a swing trading perspective. If you're writing this down and saying, listen, I'm doing my analysis now, how am I feeling? Perhaps if you're too excited, you identify too many trading opportunities because you're too optimistic about them working. And in reality, there's substandard opportunities. So again, a really easy thing to do, honest thing to do, but it can really help you loads, because even if you identify one that says, listen, I feel bad about today, and if I eliminate that, then you could eliminate half of your losses. And what a brilliant thing that would be. It would immediately give you a boost. All right, let's go on to in fact, the next video, guys, we'll talk about some more stuff, i.e. strategy, some other things that we're going to put into our trading journal, because this is a really key part of it, because even if we haven't had it before we're analyzing it, now we can do it from now. And if we kind of reiterate this process and rinse and repeat, eventually we'll get to a position where we want to be in trading. All right, guys, catch you in the next video. Talk about journaling a little bit more. Take care.